Hi, Theophilus. Thank you so much for joining us on our podcast today. We're happy to have you. It's been a pleasure interacting with you these last few weeks. And it's interesting that at the point that we started speaking, I started getting more and more interested in the crypto compliance space. And then we had our chat, and I was like, this guy is a fountain of knowledge. And so I want you to be able to kind of share your knowledge with the listeners. And so thank you so much for joining us. If you don't mind, can you just kind of give a brief introduction of yourself and your background before we kind of jump into the questions?
Okay, thank you so much, Tunde, for having me as well. I've had a couple of interesting chats with you before now, and I'm happy to be on the podcast to share some crypto context as far as compliance is concerned. So, just to give a bit profile about myself, my name is Theophilus. I am a legal and compliance professional. I was called to bar sometime in 2021, and I have since then worked on legal risk and compliance. So I essentially can function in any of the departments on the second line. Work mostly with fintechs and crypto companies to set up, build, maintain compliance programs. I started out with a compliance consulting firm called Regfyl Consult, where we had a couple of high-profile fintech clients that we were supporting, including crypto. So I mean, we've been at it for a while. I've done the consulting side. I've also been an operator in this space, right? Working directly inside a crypto startup currently called Busha, a crypto company called Busha. And Busha is one of the two licensed exchanges in Nigeria. We're also pursuing some regulatory engagements in other parts of Africa. The central objective for us is to onboard Africans into the crypto economy. So from the compliance side of things, our own work is to my own work and my team as well is to support this business objective by providing a compliance framework that can ensure that we do this safely and within the bounds of the law. Right. So that's just a bit of my professional profile, my work history. I hold scholarships and certifications from the two major anti-financial crimes certifying bodies, ACFCS and ACAMS. Yeah. So I
Yeah.
hold scholarships from them, and I have some financial crime certifications from them, including the Certified Crypto Asset Anti-Financial Crime Specialist certification and the Certified Financial Crime Specialist certification. But aside from these, I also do compliance in other areas, including information security, data protection, and I hold certifications in those areas as well. And when it comes to crypto certifications, I hold some from Chainalysis. I work very closely with some some service providers from Chainalysis and support teams that have the Know Your Transaction certification from Chainalysis, and I'm currently studying to get my Reactor certification as well. That's just a bit about my professional profile. I'm sure as we continue in the conversations, we'll get to know more, I guess.
Yeah, that's fantastic. Thank you so much, Theophilus. So, I mean, from that background, how do you think, kind of, in your experience, how has crypto compliance evolved over the last few years in Nigeria? Because it almost seems like just yesterday, anything crypto was like persona non grata, and now we have people getting crypto licenses. So, how do you think it's evolved over the last few years, and what do you think are the biggest regulatory challenges that face crypto firms like yours in Nigeria today?
Thank you. I think a very important disclaimer I should make before we go ahead is that every opinion I express on this call is mine and not that of my
Definitely.
company. I may
Yep.
make some reference, right? But
Yep.
I'm just, yeah, it's personal opinion, no legal
Yep.
investment or financial advice. All right. So
Yeah,
since
please.
we have
Yeah,
that out of the
very, very
way,
good disclaimer to make. Very good disclaimer to make.
thank you. So since we have that out of the way, I think I'll just go straight to the crux of your question. How has crypto evolved from a regulatory perspective? I mean, we've come a long way. That's what I would say. Even though I mean I started out from the consulting side, we see a lot of these things. The initial approach was that of regulatory aversion. So the regulators are not very keen on crypto. They had this idea that crypto was a just an avenue to commit crime or launder proceeds of crime. And you would see that in the approach they took in around 2018, 2019, where you started to see a couple of notices from regulators on the continent. Right, you see the one from the Central Bank of Nigeria. You see the warning, the public warning from the Securities and Exchange Commission. If you go to
Yep.
Ghana as well, you see the warning from the Bank of Ghana. You find similar templates really across the jurisdiction, right, across the continent. In Kenya, in Malawi, in South Africa as well. I'm sure they started as well from a position of sort of an implicit ban, right? But you
Okay.
see that in all these notices, there was, I mean, at first it wasn't so direct for many of these countries, right? And I think I'll focus a lot more on Nigeria. It wasn't so direct to say, oh, crypto is banned, right? It was more from a point of warning, right? You're warned about investing in crypto or in using
Mm-hmm.
crypto because you could lose your money. There's the anti-financial crimes risk and all that. Financial crimes risk involved in adopting crypto. But because, I mean, the markets uh, continue to grow, continue to thrive, started to see more stringent action from the regulators. So you start to see a more direct approach from these regulators saying, okay, banks should stop dealing with entities that are related to crypto. Start to
Mm-hmm.
see letters of warning. You start to see a couple of fines as well for financial institutions. I think at the time, Fidelity Bank and some of these other banks were fined because of the perceived exposure to crypto assets, right? Started to order a closure of accounts and all that. So that was so it moved from a state of sort of an indirect ban or public warning to a state of
Mm-hmm.
bans, like implicit and
Mm-hmm.
explicit bans, depending on which country you're looking from, you're looking
Mm-hmm.
at. And then from there, we started to see a couple of pushbacks from other regulators and supervisory agencies as well. Started to see financial crimes commissions and investigative agencies going after people uh, that were involved with crypto asset of some sort. Of course, I mean,
Mm-hmm.
the conversation can get really nuanced, right? But that was
Mm-hmm.
the approach from, say, let's say around the 2015s to 2020s, right? A lot of the countries that, I mean, today have some framework in place were averse to crypto. And it was so tough to navigate the scene at the time because I have always proceeded from a point of technology neutrality, right? The technology itself
Yep.
is not bad, right?
Yep.
But it's the people who use it that could be potentially bad, right? The technology itself is fantastic, and I mean, with that knowledge in hand, you get to look at some of these innovations differently. I
Yep.
mean, there was the initial resistance to some of these payment service providers as well from the incumbent players, right? There was the whole lack of trust, but we are moving at a pace where we need these technologies to support the next wave of revolution, right? Next wave of
Mm-hmm.
industrial revolution. So we need to sit down and approach it a lot more cautiously than just banning it. But beyond
Yep.
that, we started to see that regulators saw the inevitability of the technology in some way, right? Even though at some point too there was pressure from the international community, Financial Action Task Force, GIABA in West Africa, um, because from the mutual evaluations that were conducted on some of these countries, they scored rather poorly on the basis of the lack of proper regulation for crypto assets, right? Because in spite of these bans, we see that markets continue to thrive. So what I mean, of course, they caused some damage from the operational side of things, but there was the whole interest in crypto, and you started to see that a lot more people were getting onboarded into the crypto economy. So from there, we
Yep.
started to see that there was a shift, right, a regulatory shift into okay, let's understand what this technology is about. I know the SEC had a committee set up sometime around 2019 or 2020, I think.
Okay.
You also see similar approach from other countries in Africa where they decided to try to learn more about crypto so that they can move towards regulating it. And I think, I
And is
mean, that
that
moved us into the. Okay, I'm listening.
yeah. Yeah,
What
I
you
was just
said?
going to ask, and is that because in your opinion, is that because the regulators felt that it was just inevitable? You can't. There's no stopping crypto. That is best that they understand it intensely so that they can find a way to regulate it. Do you think that was one of the reasons why it was just because they saw it as a moving train? Is it that you get on the train and find a way to regulate the train, or you get run over by the train?
I think it's a combination of these two factors you just mentioned and pressure from the international community, right?
Okay.
So there's the part about yes, it's inevitable, right? In spite of the ban, in spite of the closure of bank accounts, in spite of every possible measure that you find that Nigerian regulators, for instance, took, Nigeria still continued to come up on rank in terms of rankings for crypto
Mhm.
adoption globally,
Yep.
right? So it essentially shows that the control measures that the regulators were taking were not yielding results, because if they were
Mhm.
yielding results, we should have seen a drop in that number. But beyond that, right, we started to see as well some sort of like exposure, right? In terms of how much you get cooperation of these entities, like virtual asset entities, say when you're doing your financial crimes investigations, when you, I mean, where you look at how interconnected crypto can be within the traditional financial system. So, I mean, I speak a lot with fraud investigators and compliance teams of traditional financial institutions where they say stuff like when they are tracing proceeds of crime, or when they are tracing
Yep.
stolen money, once they are able to trace it to a crypto exchange, they just believe that that money is gone. But that shouldn't be the
Mhm.
case, right? The only reason why that used to be the case was because um, crypto was treated as persona non grata really in the system. So
Yep.
you are not supposed to be able to communicate to the crypto exchange and say, okay, we saw this money coming into your system. Can you help us track and work towards salvaging any amounts that is left, right? So that's the second arm of things, right? Another very important factor that's played into the recent change of heart by African regulators is pressure from the international community, right? Nigeria, Kenya, South Africa, these are top three uh, destinations, like top destinations for foreign investments in Africa, right?
Mhm.
And I mean, in terms of economy, the size of the economies as well, they're quite large economies. But these three countries entered the Financial Action Task Force grey list. Can't
Mhm.
remember what year that was, right? But at different years, right? And
Yep.
this was because of the lack of action, especially around virtual assets. So you would
Yep.
see that compared to some other countries in Africa, there's been rapid movements in terms of regulations from these three countries in terms of virtual assets. South Africa, for instance, has licensed this first set of virtual asset service providers. Kenya currently is working on its own bill. There's been a couple of regulatory consultations, town halls, and all that on the virtual asset bill in Kenya. Nigeria as well proceeded to introduce some proposed rules. I mean, there's a rule currently in force, and there's another proposed rule that is currently undergoing some consultations. They've licensed the first set of virtual asset service providers as well in a sandbox environment. So all these things came about partly because there's pressure from the international community that they should implement much better controls to supervise developments in this sector. Now, I think
Mhm.
there are a number of other factors as well, but these are some of the most prominent reasons why you'd see the recent change of hearts from these regulators.
Okay, that's very very educative. Thank you so much for that. And I actually didn't hadn't considered the other points you'd made specifically around law enforcement and the need to be able to trace some of these assets and the lack of being able to do that when they were treated as persona non grata. So thanks for that very very educative explanation. A lot of people when they hear crypto, at least the crypto enthusiasts, they have this drive for anonymity. They want to be able to not be regulated or to be governed by any particular institution or any particular nation. In fact, it's crypto is almost like the cloak or the shield of the libertarian movement worldwide, and so there's that kind of temptation and that pressure between privacy and regulatory obligations. And so, as a crypto enthusiast, if I I'm on an exchange, I expect that there's a level of anonymity or privacy that being on that exchange should bring to me. But then, if you're on the exchange side, you have your obligations around, for instance, KYC and customer due diligence. And so, how do exchanges, or how do you think exchanges can, and I'm not speaking specifically about your company, I'm just speaking broadly, how can they manage those seemingly opposing concepts, anonymity and customer due diligence and KYC obligations? So how do you strike that?
Yeah, absolutely.
How should do they strike that balance? Yeah.
Yeah, absolutely. That's a very good question because it's something. It's sort of like an existential question for us as well in
Mm-hmm.
the industry, right? We start to look at um, we there's a sort of promise of freedom and less friction for crypto, right? That makes
Mm-hmm.
it seem like it's rather antithetical to even have any KYC in the first place. But
Mm-hmm.
I like to look at it from this perspective. I mean, if you're looking at it in terms as a compliance professional, um, the reason why a lot of people are moving to crypto, I mean, yeah, you have a myriad of reasons, but one of the major reasons is because the traditional financial system in some way has not lived up it to has not lived up to what I mean expectations in terms of user satisfaction, speed, reliability, and frictionless payments, right? And crypto sort of affords us an opportunity from a compliance and regulation perspective to rethink how we have designed KYC. I mean, even from a country approach, how we
Mm-hmm.
have designed anti-financial crime risk assessment in a way that we can remove as many friction points, right, as possible to facilitate a better user experience. And this, I think, to make it more practical, I want to look at it from a perspective of how have we designed KYC as a country, and how is this standing as a barrier to financial inclusion for a lot of people? Now, when we say financial inclusion, a lot of people say they just look to the rural areas, the unbanked, and all that. But there's also the part of financial inclusion that talks about the underbanked, right? People that are underserved by financial services, and this is one of the things that crypto helps us to rethink, helps us to understand. Now, I'm not
Mm-hmm.
gonna say sit here and say that crypto entities should not do KYC. Definitely not, right? I think depending on your role in the value chain, KYC can be really, really important. And so for us as an exchange, KYC is mandatory because we understand that we play a very significant role, and there's this very huge risk of obfuscation. Now, obfuscation
Mm-hmm.
in the sense that when fiat comes in, it possibly leaves as crypto, right? That's on ramping. When crypto
Mm-hmm.
comes in, it's likely to leave as fiat, right?
Mm-hmm.
And we are the only ones, we're sort of the custodians of that data. We are the only ones that can easily say, this is where this money came from, this is where it has gone to. That is why KYC can be really important for us, right? And
Mm-hmm.
for law enforcement, they need this data. But
Mm-hmm.
I don't think it is totally antithetical to the premise of crypto because we stand in between the fiat and the decentralized finance system, right? And there are other players that play in other areas, other segments of the value chain. So for us, it's very important because we are the ones that can possibly connect some of these transactions with others, based on what I said earlier. But for some other people, the risk is not as heightened as the risk for us, right?
Mm-hmm.
That's the first thing I would like to say on that. There's secondly, um, I like to think of KYC. I like to think of compliance, right, as some sort of social contract, right? Maybe it's just the lawyer in me that is speaking here, but sometimes when we look at the law, we think, okay, yeah, I mean, there's a social contract. One of the theories of the
Yeah.
origin of law is there's a social contract, and people have ceded a certain part of their freedom, a certain part of their rights to a central governing authority that then helps to ensure that there's rights, um, might is no longer right, and people are able to freely do whatever they do within the ambit of the law. And I like to think of KYC in that respect as well. We have a social duty, right, as individuals. That's sort of very theoretical, right? But I like to think of it as we all owe a social duty to one another, to the government, to stakeholders in the financial service industry, to ensure that our payment technology, our payments, our financial activities do not, I mean, in the first instance, facilitate or help to launder the proceeds of crime, right? And then in the second instance, we are able to take on a very tiny fraction of inconvenience just so that we are able to drive out bad actors from the payment system.
Yeah.
Now, I don't know if that is complicated, but I like
No, no,
seeing
no.
that. Okay.
I think it's fantastic. I think it's actually quite fascinating. One thing when you were mentioning social contract, and I understand, and I think I agree with you around that rationale that you kind of where you are effectively the gateway for fiat into the decentralized world, and you are one of the few people that are able to see both sides. And so when there are bad actors who are trying to operate, you are effectively the only ones, one of the only few people that can actually help to deter these bad actors by providing, in certain instances, information. And in order to provide that information, you have to have collected at least a certain level of customer information, and then that's around the KYC and customer due diligence obligations. Why I was smiling when you were speaking was I thought to myself that I don't think people like Thomas Hobbes, John Locke, Jean-Jacques Rousseau would have ever thought that their ideas on social contracts would be applied to cryptocurrency. I don't know, 100, 200 years later. So that's actually interesting that you drew that line. And yeah, the lawyer in you is always there. So I also do things like that as well. So the lawyer is very, very, very well and truly alive inside you. So yeah, that explanation is it's very, very interesting and important. But it also drives me to the next question I have, which is because you mentioned law enforcement, and it seems that one of the core driving philosophies or points, or the rationale, if you will, around a level of customer due diligence that has to exist for crypto companies and crypto exchanges is so that they could potentially be able to help law enforcement when there are issues of fraud and money laundering and things like that. So, I mean, in your experience, and I think one of the things that is actually a staple whenever you look at the reports, the yearly reports that are done by the NFIU or maybe reports done by the EFCC in Nigeria, you see that crypto comes up a lot because, like you said, when people take money in fraud or corruption, one of the quickest ways that they're able to try to convert it is to try to convert it into cryptocurrency. And so, in your experience, kind of, I don't know how much exposure you've had to working with law enforcement around this. So, but in your experience, how can compliance teams effectively kind of liaise with law enforcement agencies when they're investigating these types of crypto-related financial crimes? And what are the challenges that you see could or have cropped up when kind of dealing with these requests that come from law enforcement agencies?
Yeah, that's an interesting question. So, dealing with law enforcement agencies is going to be part of like day to day of anybody that works in compliance in crypto, because law enforcement would always want information, right? And I'm glad you tied the KYC to this question. So, in terms of best practices, I think first thing is to consider that you have like a clear legal basis for sharing that information. And in this space, you're already entering into data protection borders, right? The Data Protection Act in Nigeria, if you look at the one in Kenya as well, they have provisions that allow you to process customer data, process data, a data subject's personal data for the purpose of a legal obligation or satisfaction of a legal obligation. And that is typically where you're going to be, what you're going to be relying on to share data with law enforcement agencies. Now, when you're able to find a clear legal basis for the sharing, you can then set some standards or some guardrails, because it's easy for anybody to just send you an email, maybe find one domain somewhere that looks like a law enforcement agency and then claim to want a customer's personal data. You are supposed to set some guardrails that help you at least verify to a large extent that this person that is seeking this information has the due authority and qualifies under this legal basis request
Mm-hmm.
for and receive this information from us, because you know that if you do not provide that information, especially where you
Mm-hmm.
have a legal obligation, right, under say Money
Mm-hmm.
Laundering Act or whatever criminal law that is being relied on, you
Mm-hmm.
may be bearing liability, right, in some way. So part of your own work is to protect the company from those kind of liabilities, but you should also try to strike a balance between that duty to your company and the duty to the
Mm-hmm.
customer who is the data subject.
Yep.
So do proper verification, verify the lawful basis for processing, verify that it is a truly existing law enforcement agency, verify that you have a
Mm-hmm.
legal obligation to provide that data to them. And I mean, that's why you should have like a disclosure guidelines in your company, right? And this is
Mm-hmm.
like just a general awareness topic now, right? Your disclosure
Mm-hmm.
guidelines should talk about some of the checklists that you want each request to meet before you respond. So for instance, if a law enforcement agency reaches out today and say, oh, just give us this data, and they do not specify clearly the type of data they want, they do not provide the legal basis for requesting that data, right? What's the law that is backing this claim? They do not
Mm-hmm.
they do not provide sufficient information to allow us to trace that particular account. They will
Mm-hmm.
definitely not be getting whatever information they have, right? In some cases, we might object to sharing based on some of these points and some other legal considerations, of course.
Mm-hmm.
In this case, you're going to have most to work between your compliance teams and legal teams to properly address that issue. But something else I would like to quickly talk about here is around foreign law enforcement agencies, right?
Mm-hmm.
It could get really dicey when you're looking at legal basis for sharing, when you get law enforcement requests from law enforcement agencies outside of Nigeria. Because if you look at the way the Nigerian Data Protection Act was drafted, right, or even the Money Laundering Act, there's nothing in these laws that really speaks to the specifics of that situation, right? So you don't know whether or not that provision can extend to cover foreign law enforcement agencies, or it only
Mm-hmm.
applies to local law enforcement agencies. So this is like a very big question that
Yeah.
regulatory agencies should be looking to solve, right? In
Mm-hmm.
regulations, of course, there are some consultations to manage some of these issues, but it's a very big question to consider. So when you're looking at your lawful basis, you want to consider whether or not this law enforcement agency that is requesting for this data would qualify under the provision of, under that lawful basis of compliance with
Mm-hmm.
a regulatory obligation, or you have to consider whether it's legitimate interest of a third party or whatever other lawful basis from which you can share that data. But one thing you should know is you cannot be even though you have to protect your customer data, you also have to manage law enforcement relations properly so that you don't create a sort of public persona
Adversarial.
that you are
Yeah.
uncooperative.
Yeah.
Exactly. I mean,
And then you mentioned that the key challenge that currently exists is with respect to foreign law enforcement agencies, and because then there's an expectation that you would have to understand whether they in their countries have that legal basis, number one, and then whether they then even have the legal basis to ask you in your country. And so that's a bit of a gray area that it's people are facing at the moment. I presume that in that scenario, if for instance as a law enforcement agency from Belgium reached out to a company, a crypto company in Nigeria, and you weren't sure whether you had that obligation to release that information, would it not be the best practice to then redirect them to the relevant law enforcement agency in Nigeria so that they can then coordinate that request and through the proper channels? Is that something that you've seen done, or is that something you would see expected? Because then it means that you are still dealing with your local guys, but then they are the ones that are dealing with the complexity of the foreign requests.
yeah, absolutely. All right, that's spot on. When you get some of those requests that you're unable to find the proper legal basis for sharing, the best thing is to redirect to the EFCC. So and local law enforcement agencies. So what we typically do is, because law enforcement requests goes beyond data requests. Sometimes you get
Yeah,
freezing orders. Sometimes you get repatriation orders, right? And
yeah,
you cannot divest a customer of their assets on the basis
yeah.
of an order that was given outside of Nigeria, right? So when you
Yeah.
start to consider the legal nuance behind this, you want to look at, do you have a mutual legal assistance treaty with Nigeria? Is
Mm-hmm.
there, what are the processes behind that? Have they tried to seek a reciprocal order in
Mm-hmm.
the Nigerian courts, right? You just look at that complexity involved, the length of time it might take. It just makes it a
Mm-hmm.
lot easier for you to just let me do an introduction to a local law enforcement agency that can take this up for you and assist you.
Mm-hmm.
So our own direct interface would be with the local law enforcement agency, and like, that's why I
I
said
see. I
it's
see.
really spot on. So yeah, so when we get
Okay.
some of those requests, that's typically what we do. Yeah.
Okay. I mean, thank you so much for that clarity. I'm kind of just getting to the end of my questions and this conversation. I really enjoyed it, but I know that you're a busy man, so I just have a few questions around what the future looks like. So I think you very clearly mapped out how we've got the history so far, how we got to where we are, with the implicit and then the explicit bans, and then now the it's kind of the loosening of their grip a bit. So, in your opinion, what do you feel is the future of crypto compliance in Nigeria specifically? Where do you see the industry heading in the next few years?
Yeah, I think the future is quite bright. We've seen a couple of we've seen the body language of the regulators and supervisory authorities. They are ready to learn the nuances of the space, and they are also working with us in the sandbox program to understand some of the operational context of crypto that makes it really different from what you would see in like the other traditional financial space. So what we can expect? Yeah, currently there's a sandbox on the program ongoing, and the SEC has expressed its commitment um, to provide sort of an accelerated route to final licensing in that sandbox. I mean, to participants in the sandbox program, of course, based on the evaluations they're doing. But I think
Mm-hmm.
aside from that, the learnings have been coming in useful in some of these engagements, and I'm sure it will influence the regulatory direction in
Mm-hmm.
coming years. I'm unable to speak
Yes.
in specific terms, yeah, but
Yeah.
we'll see.
Understood.
Yeah, we'll see.
Understood.
Yeah, we'll see a
Understood.
lot more effective supervision.
So I'm gonna go a bit in a different direction now. So imagine I was a genie and I granted you one wish, and then you could change one thing, only one thing in Nigeria's crypto regulatory framework. What would that one thing be?
What would that one thing be?
Yeah.
Honestly, I think access to banking is the biggest issue right now. So
Okay.
I mean, in spite of the CBN's regulation that allows banks, right,
Mm-hmm.
to now interact with virtual asset entities,
Mm-hmm.
there's been a
A lot
whole
of
lot
red
of
tapes. Yeah.
procedural bottleneck and some sort of hesitation, right? Yeah. So
Yeah.
if there was one thing I would change, I would totally fix that,
Maybe that.
right? So that we can
Okay.
all work together. Yeah.
Okay. Fantastic. And then I'm kind of just rounding up now. I just want to like to. I'd like to just ask because your career has been, I think, quite interesting. You've touched on so many things already, and I'm sure that there's so many more things that you have your compliance future has in store for you. But if I were just starting my compliance career, how would you kind of advise me? And if I wanted to go into kind of into the crypto space, what advice would you give to me for me to be able to excel in that space?
Okay, I think there are a number of things, and there are a lot of number of people that have already said a lot of stuff about this out there. But one thing that I think has really worked for me in my compliance journey is putting myself in the way of new information that is coming out of the space, right? You can't do without continuous learning, and because crypto is something that is like fast moving, right?
Mm-hmm.
Almost every day there's a new innovative product, or there's one product somewhere that we're seeing some new type of risk associated with it. So
Mm-hmm.
putting yourself in the way of new information coming out of the space is a very good way to like speed learn the space. So curate your timelines across your social media, so you ensure you're following some of the top voices in the space. So there's a news today, you read it, you try to make sense of it, you ask questions if possible, and just gradually like that, you start to become well grounded in the space yourself. But I mean, knowledge is not enough. You also have to get your hands to work as well. So getting internships, working as associates in some of these crypto firms as well would be very useful as well to learn in this space. But willingness to learn is possibly one of the greatest things, greatest attributes you could have that could help to scale a career in that space.
And thank you so much for that. And what about, I mean, so you've spoken about learning from kind of interacting and just kind of, if you like being aware of what's going on in the space. Do you suggest, or do you think any kind of specific qualification or certification is helpful? Because Nigerians, we love our certificates and we love our certifications. So do you think that's helpful, or do you think it's better to kind of just because it's so fast moving, even if you got a certificate today, in 3 months it's useless? So what is the value of that kind of structured learning and certification in the crypto space?
It could be very useful, but I someone who has packed a number of certifications, right?
Yeah, but don't worry, we're in the same boat.
honestly,
We're in the same boat.
I honestly feel that sometimes it can be overrated in terms of, when you start to do the hands-on work,
Yeah.
you sometimes feel like it's overrated. Of course, there are the practical ones, and that can be very useful in crypto, right? So depending on what tool the company uses, that's if you're already in the space, you should get the transaction monitoring certifications, right? Because that's where you're going to be doing a lot of financial crimes investigations, reviewing alerts, and it can get really technical, a lot more technical on the fiat side. But understanding the principles, is very good, and you get this from a lot of those other certifications. But when you want to enter the space, or when you want to get more hands-on knowledge, you should go for those ones that speak to some of the tools you will be using. So you're looking at the TRMs, the chain analysis, the elliptic, and some of their trainings. But of course, many of these trainings are not tool agnostic. So you're looking at trainings that are just fixated on that specific tool. But it can be very useful to anybody that's starting.
Okay. All right. Thank you so much. Just before you go, is there anything you want to share with us? Any big projects that you're working on? Any initiatives that you want to share with us? And also, like, if I were a young crypto compliance associate wanting to kind of get in touch with you or keep up with your work, where is the best channel for me to reach out to you and follow you and what you do?
Okay, best channel to reach out to me would be LinkedIn. My name is just my name, Theophilus Oladipo. Any big projects? Yeah, I'm working on a couple of things. Of course, I do a lot of work in my company, so
it's all hush hush for now.
But very soon, we're still in a lot of time.
Okay, that's great. Thank you so much, Theophilus, for sharing your knowledge and for joining us on the podcast. Hope we can get you back again, and when some of these big projects have come to fruition, and then you can freely talk about them. So we'd love to have you back. It's been a pleasure. Thank you so much.
All right, thank you so much. Thanks for having me.